Well, let's shift gears and chat cement as well. Shree Cement, in fact, put out its numbers with the revenues coming in line with street expectations at about 3,070 crores. The profits, though, as well as operational performance, was a bit disappointing. Mr. H.M. Bangur is the managing director of Shree Cements. He now joins in to give us a little more clarity on the quarter gone by. It's a very actively tracked stock as well. Thank you so much, Mr. Bangur, for joining in today on ET Now. And just taking a look at the operational performance this time around, I'd like to come to you on that. Your EBITDA has come in at about 575 odd crores. What was the reason for a dip in your operational performance, and do you believe that this is just an aberration, things will improve going forward?
There are two things. One is EBITDA is the result of total material sold and total realization. First of all, I will come with... Hello?
So go ahead, we can hear you, Mr. Bangur.
Okay. So, first of all, our realization has gone down by 5%, but our sales have gone up by 18%. Cost push has been there and the realization going down. So, instead of 715 crore for cement, our EBITDA from cement is 534 crore. The rest is from the power. Second question is, going forward, we think this is one of the worst quarter. From the next quarter onwards, things will stabilize, and for the rest of the year, EBITDA will only go better, and overall, the year should be finished with something better result.
Well, thank you, sir. So this is Vivek Iyer, joining you from the research team. So you actually spoke about the fact that you've seen quite a bit of a revenue uptick. Could you help us with the volume numbers, for the quarter gone by? And more importantly, sir, which are the regions that are seeing significant demand, and what are the key demand drivers? So from which pocket of industrial activity or from residential activity are you actually seeing some amount of green shoot in terms of the demand?
First of all, our clinker production has increased by 20% from 38.6 lakh tons to 46.1 lakh tons. And cement sale have increased again 18% from 57.6 lakh tons to 68.2 lakh tons. Now, this demand is coming more from the infrastructure sector. Government is spending quite a lot of money. Many smaller projects which are not really noticeable of 500 to 1,000 crores are there, and they all require cement. Most of them are road projects. There can be canal projects or some small things continuously going on. Growth in volume in East India has gone up by 37% and North India by 12%. So this volume push has resulted in the market a distortion. The prices have come down, so they should go up again.
Note that North India, which so far was quite a bit of a laggard, you're actually telling us that there has been some amount of recovery there. But sir, when it comes to the entire sector, last week we saw so much news flow, and I'd actually like your take on that. So number one, there's been the claim of cartelization once again. The court has upheld the order. I'd like your take on that, and more importantly, especially for you, because you use petcoke, which is such an integral part of your fuel mix. I'd like to understand from you, sir, what does it mean when you're allowed to actually import petcoke? How much of cost saving does it actually help a player like Shree Cement, and how does it help the industry overall?
First of all, petcoke of domestic and imported petcoke are priced almost same. So if we are allowed petcoke from outside, doesn't mean any much bigger change, as domestic producers are giving at the same rate. Only thing is, if it is not allowed, domestic price may increase. Now, government is saying that first of all, the domestic use should be there, then only import should be there, which is very fair. Second thing is, the petcoke itself compared to coal. Earlier, there was big price difference when it was a new fuel. Now, it is no more an alternate fuel, but it is part and parcel of the main fuel. Price difference between coal and petcoke is also minuscule, maybe 2 to 3%. So even if petcoke is totally banned or allowed, it doesn't matter, as prices will be almost same. Now, if 2 to 3% if petcoke is cheaper, that much additional will be the cost of production because of little lower productivity. So now petcoke has lost most of its meaning. Whether it is allowed or not, we all are not concerned much. But if it is allowed, it will be better, as we will be able to use lower grade limestone, and that will be a national resource, and limestone in the mines will last for longer time.
So, when it comes to usage of petcoke, you've been one of the pioneers in the industry. But in the last couple of years, you've actually spoken to us about the price differential that exists between coal and petcoke. So, for a player like Shree Cement, would you now also look at increasing the amount of coal that you use in your fuel mix? And the other thing is, what are the other activities or other operations by which you can actually increase the operational efficiency and thereby improving your EBITDA per ton?
Operational efficiency will increase only by reducing the freight cost, which we are able to reduce in future as more cement will be sold in the local market. We have a plant in Bihar, and in the Bihar market, our realization is better as freight cost will come down. Similarly, energy cost is the only thing. So if a specific energy requirement is coming down, but there are limitations, not much can be done. Grinding units is one way which will lower the freight cost, and that we are putting a lot of grinding units in East India as well.
Mr. Bangur, you've been fairly clear on the trajectory going forward as well as your overall pricing, volume growth and earnings. Thank you for joining us on ET Now and giving the street more clarity on the quarter gone by.